Whether you're a business owner or someone looking to start their business, eventually you're going to face these three questions. How can I scale this business? Do I need to raise money? And how can I pick and find investors? In this episode, we take a peek behind the curtain into the world of VCs, and we uncover the strategies and the secrets that will help you scale your business today and take it to the next level. The following is a conversation with Murad, a senior partner at Global Ventures, a venture capital firm that focuses on investing in emerging market founders on a mission to change the world. With an extensive background as a finance expert and holding multiple key leadership positions as CEO and COO, he has set himself apart as one of the key leading voices in venture capital across the region. And if you enjoyed this episode, guys, if you could please do me the small favor of hitting that subscribe button, would really help me build the show and build the channel and bring more amazing guests and inspiring conversations. But that's enough for me from now. Let's get to the episode. Hey guys, welcome to another episode of Hope It Helps, and I have a very special guest with me today, Mr. Saeed Murad. Saeed, welcome to the show, man.
Thank you, Khaled. Great to be here.
Thank you so much for your time, man. I really appreciate it. So, just to give the audience some context, so Saeed's family, guys, and we have known each other for a very long time. Now, Saeed's career has been in the financial world as a VC, as a COO, as a CEO. So, a lot of people that I talk to today, Saeed, are lots of founders, and a lot of them are struggling with finding funding, with building pitch decks, with understanding what a VC is looking for, how do they build an attractive offer. And I think there's a lot of misconceptions around VCs that maybe the general public like us don't know about, that, you know, how you guys look at things, how you analyze. So I wanted today to kind of be a venture capital masterclass, think of it in that way, you know, to give people the step-by-step process of how you guys think, what do you look for, how do you analyze the importance of the founder versus the importance of the product, you know, tackle all those areas that you guys take into consideration, because I think there's not enough knowledge out there about what you guys do and how you guys work. But before we get into all of that, Saeed, why don't you give all of us a little bit of background about yourself, and we'll take it from there.
Happy to. So I'm Saeed Murad, born and raised in Jordan. Moved to London for my undergrad and then moved to Dubai. Started my career, as you said, in financial services space and private equity specifically. And then moved into banking. Did my MBA in INSEAD, and then did a short stint in consulting before moving into operating roles. So as you mentioned, I was CEO of Groupon.
Yeah.
I was COO at a large facilities management business called EFS. And then I dove headfirst into the startup space. I joined a vertical e-commerce business as their COO. It was called Jamalon, right after the Series A, and with essentially the role to come in, operationally optimize, enhance the business, and take it to be Series B ready, and then raise a Series B. Thankfully did that. And then transitioned into VC.
Yeah.
Right now I'm a senior partner at Global Ventures, which is a regional VC firm. We invest predominantly around Series A across the Middle East and Africa, tech-enabled businesses, generally sector agnostic, and I'll dive into why the comment on generally in a bit. But yeah, I mean, background in financial services, background in consulting, background in operating and running businesses, including in the startup ecosystem, and then combined all those to a role in VC.
Yeah. So I wanted to start, first of all, so I know you studied engineering at Imperial in London, and one of the podcasts you were on, the guy was asking you about, you know, that whole, the whole Liverpool potential acquisition back in the day, and with DIC and whatever, and what was interesting, what you said is like, it's hard to turn your passion into an Excel sheet, but it seems like you have with the career that you have. So I want to understand, graduating as an engineer, what drew you to finance in the career that you've had so far?
I think it was sort of the world of optionality. So studying engineering means you're somebody that's effectively comfortable with numbers, comfortable with problem solving, thinking outside the box. And it's taking that mentality and then applying it to any form of industry. Quite frankly, I think engineering is a discipline versus, you know, a specific knowledge. Yes, there are specific elements around the knowledge, but even those come into play later in life. Like having studied material science and engineering, that's come into play more recently with the work we're doing around the supply chain tech sector.
Interesting.
And
Okay.
so full circle, 20 years later kind of thing. But the reality is it's much more of a discipline, and it's that ability to just sort of maneuver around numbers very comfortably. A lot of, particularly the early stages of financial services, when you're in your analyst roles and so on, they're very centered around numbers, around crunching the numbers, understanding data. And a lot of it is stuff that you can be comfortable with if you're an engineer by nature. That's why the top sort of financial services businesses and so on, they all go and recruit from the engineering schools.
Yeah, because I like the way you described it. It is a discipline, and it's very common you hear that engineers transition into the finance world. Of course, numbers are numbers. If you're comfortable there, you'll probably be comfortable here. But I think the problem-solving aspect is why they're so in demand when it comes, especially when it comes to finance, because you need to break down data, you need to think it through sequentially, and come out with new creative ways to
100%.
address solutions.
100%.
So so you started your career in private equity, and then you were in investment banking. You did your MBA, COO at Jamalon, CEO at Groupon, and now you're in venture capital. So you said you're an investor, operator, business builder, turned VC, and by design as a VC, you're an optimist. So I want to understand how you've worn a lot of different hats in the financial world. How has that experience played into the work you're doing now as a VC?
You are an amalgamation and aggregation of your experiences, right?
Yeah.
And I think being able to understand the discipline of investing, the thoughtfulness that needs to go into allocating capital, combining that with understanding the nuances of a business is critical. So I'm biased, but in my opinion, I believe that the best VCs should be former operators or can be former operators.
Operators specifically.
I think when you operate a business, when you're responsible for your P&L, when you're running a company, there's a different discipline. Don't get me wrong. There are phenomenal VCs out there who haven't necessarily operated before. Maybe they've come from a background in financial services or others. And they're incredible ones out there. But my biased belief is if you've been through similar journeys, your ability to understand what founders are going through, particularly in the early stages when they're building their businesses, is differentiated. The most overbeaten term in venture capital probably is value creation.
Value creation, yeah, you hear that a lot.
But what does it mean, right? It's basically when you are the go-to, when you are the first point of call, when you are the person that a founder feels that they want to reach out to you when they want to run through something, whether it's they're facing a problem, whether it's they've had an aha moment and they want to see what you think, or they want to go through different aspects and iterations of a certain move that they want to make for their company. You want to be the person that's helping them achieve that. You want to be the person that's driving the company's growth. It's the founder and the founder journey. As a VC, your role is you are supporting, and it's important to acknowledge that. I always say to founders, don't ever be swayed by capital. Don't ever shift your business plans depending on what capital tells you to do. Understand what you're trying to build. Have your real dedication behind it. Make sure that you are really driven behind the problem that you're trying to solve. You're going to crack it. And the right capital will find its way to you if the problem you're solving for is sizable enough, if the solution that you are providing is scalable enough, and if you are looking at something that can be truly transformative.
Yeah.
That is what VCs look for ultimately, right? It's how can you scale a business and how can you generate an outcome?
Yeah. It's really interesting to hear from your perspective that, because a lot of times I think the capital side can sway people to go down different avenues that they probably maybe weren't prepared to go down, or that's not the vision they had for the company. So it's interesting to hear that, because I think there's kind of a tug of war going on. You're like, as a founder, you're like, okay, I need funding, but funding is difficult to get, and I have a specific vision. So I go now, I get the funding, and then the vehicle that is funding me, whether that's an angel investor, whether that's a VC, is now telling me maybe I should do something else. So
let me clarify that for a second.
Sure.
Let's not be altruistic.
Yeah.
Okay?
Yeah.
Let's be very practical here for a second. The reality is you should be open-minded and you should listen, but you should only take on what you accept.
What you accept.
Don't go against what you wanted to do. So if you're heading left and someone says, nope, you need to go right, don't just go right. Pause for a second. Understand the consequences of going right. Understand the consequences and the permutations of what will happen if I leave the path that I'm on today and go towards a different path.
Mm-hmm.
Understand the nuances around if I am to shift gears or to change course, then what is that going to mean? You'll see a lot of founders, in particular, when they go to market, they will pivot or adapt their businesses.
Sure.
Pivot's a big word. But we've seen everything from a minor adaptation to a full pivot. And the reality is, it's understanding the market. It's making sure that as you go and you try to achieve what's termed product market fit, that you're able to actually identify what the market wants, what's resonating with market, and then how you grow it. It's not about being stubborn and saying, this is what I think and this is what I'm going to do and this is the only path.
Yeah.
You need to listen to input, etc. But don't just change and shift gears because a capital allocator came and said, we will fund you if you do this. Only shift gears if you fundamentally believe that that is the right shift, that is something that you need to do. And that is what I meant. Maybe I needed to qualify that.
I appreciate that because I can, but I think there's also an underlying challenge that comes with it because you just said that VCs, as a VC, your job is to support the founders in their vision, but also as VCs, you guys look at so many different businesses. You have seen and scaled so many verticals and different types of businesses. So I'm not just coming to you for the capital, I'm coming to you for your knowledge and your experience.
Absolutely.
So, but as a VC also, I'm trying to imagine myself as a VC. I'm investing in you because I want a return on my investment, correct? And as a founder, I'm coming to a VC because I have a certain vision for what I'm trying to do. Now, the incentive is if one wins, you both win. But if you have more experience as a VC in, like, let's say I'm a founder, I really think I should be going left. And then you come and tell me, Khaled, based on what we know, I think you maybe going right might be a better option. I think it's challenging because that's when I think different incentives come into play because as a VC, you want a return, but he has a very specific vision of what he wants to build and grow. So how do you manage that? You know what I'm saying?
In theory, before investing, you're going to find an aligned path or an aligned vision or direction.
Before we, right?
So the process of assessing a business, running your DD, etc. A lot of it is also about building that relationship.
Okay, I didn't know that.
The relationship doesn't actually start when an investment is completed. The relationship starts when the quote-unquote proverbial dating process starts. So when you start the fundraising, when you start to have your conversations with the different VCs, when you start to have as a founder, when you start to have your conversations with different capital allocators, and you start to say, this VC is somebody who shares in the same energy, vision, drive, direction that we want to go in. They are supportive. They have seen this in X many iterations. And so their advice is actually going to be valuable. And so in that particular example that you were sharing earlier, the VC comes to you and says, we've seen it in X many businesses, in adjacent and or similar businesses or industries. And the reality is you're actually going to find that the advice is valuable. Let's take a more specific and concrete example. You're building an e-commerce business.
Okay.
And you've brought on board an investor that has been an operator in e-commerce, that has invested in multiple e-commerce businesses and multiple e-commerce enabling businesses around that ecosystem. They've seen directionally what's happened across different verticals in the region. They're going to come to you with advice and input that's based on an aggregation of data that is very valuable information that's not publicly available. That is where you start to see that value add kick in.
Okay.
And that is where, as a founder, if you're able to go through that input and go through that advice, take what's relevant, apply it to your business, it should accelerate your growth or accelerate your path towards sustainable growth.
Sure. It's very interesting. So one thing I didn't consider, because I haven't gone out and raised money myself and so on. So the process of or the relationship starts before I get the capital and then we figure out how we're going to do this. I didn't know it starts before that, and then so when you do start, you're more aligned. It makes much more sense to me now because you're more aligned. We've agreed this is the way we want to go, and then it's tweaking as together as you go along.
It's typically a business plan that's a pre-agreed, call it at least for an institutional investor, an investment case that's been presented to an investment committee and approved.
Yeah.
There's a 3 to 5 year plan. And yes, it is not set in stone, but it's directionally there.
Yeah.
And in an ideal world, and the best performing businesses are the ones who are able to outperform their business plans and really prove traction, growth, and scalability in a differentiated manner.
Yeah. That makes a lot of sense. So coming back to just the VC aspect for a second, in the sense, let's say, because I see this from a lot of, at least people, the younger generation, people I know that they're in the field of finance, but they all want to become a VC. Now, you got into this after wearing so many different hats and after operating so many businesses, so it gave you a toolkit to be successful in this area. But let's say I'm a young guy, I want to get into VCs. I guess, how do I do that? Or if I can't want to start my career and get into that world, where should I be? What skills should I be building to move into this? Or what kind of maybe jobs or financial, institutions?
I get this question so frequently. Look, we run an internship program every summer.
Okay.
It's structured, organized. We've been running it since 2020, every single summer. We take on 15, 20 interns, typically virtual first program, which enables us to take on a large cohort. And the reality is, I think I have this conversation with the majority of people coming through that program towards the end of their internship. It's different for every person.
Sure.
There's different perspectives and different journeys that people want to go on. And depending on your goals, your ambitions, what you want to do, then there's different paths to it. For some people, they are super energized and passionate about, let's call it the startup and tech ecosystem in general. And they've spent a lot of time building depth in that ecosystem. Those are people that would want to break into VC right away and would go through an analyst program of sorts at one of the platforms. And that's a path. There are others who choose to go and build some form of experience before becoming an investor, before becoming a venture capitalist, and that's also okay. And that experience ranges from banking, consulting, operating, startups, you name it. Variety of different options, variety of different opportunities that exist out there. But at the end of the day, it's going to be down to who you are, what you're trying to build out, what your ambitions are, and what your vision is for yourself.
Yeah.
If you want to do VC for a shorter period of time and you want that to be the start of your career because you want to be a founder, you want to understand that what it's like to be on the VC side before moving into founding a business, fine.
Yeah.
If you want to go and found your own business and ultimately become a VC, some do that. There are a lot of former founders who have transitioned to become incredible VCs. And then there's those that have gone financial services and or adjacent verticals and then transition into the quote unquote buy side or investing side.
It's interesting that I think VCs, like, there's a certain perception of VCs, I think, a lot, which draws a lot of people in, working on lots of different projects, you're dealing with large amounts of money. So there's a very attractive quality to it, just like entrepreneurship has this kind of draw, you're your own boss and all that kind of stuff. But obviously, I've had many, many conversations with entrepreneurs, and I'm trying to highlight the reality of how entrepreneurship actually is. What, I guess, from a VC, what are people behind that shiny object? What is the reality of being a VC? What are these people that don't really understand what it takes to be successful at that? What don't they know?
Look, it's a very fortunate position. You're fortunate to be sitting in a position where you're listening to people pitching you their dreams, their visions, their businesses, what they're trying to do, what they've put their all behind, Remember, every founder that comes to you with their own business, it's important to acknowledge this is something that they've put a lot of time, effort, and thoughtfulness into. And they believe that this is fundamentally one of the best platforms out there for them to build out what they're trying to build out and to achieve their visions. And so for you as a VC, you're in a very fortunate position, and I say that with the utmost humility, to be able to listen to these people pitching their visions, pitching their dreams, pitching their platforms and businesses, and then ultimately figuring out what fits best with your mandate and with what you are trying to build out as a VC yourself, with your own platform, with your own portfolio construction strategy, with your own vision. And so the two have to meet.
Yeah.
But let me be the first to acknowledge that one of the toughest journeys that anyone can go to is the founder journey. Going through the founder journey is not easy. It's important to acknowledge that. It's important to understand it. You're saying you're your own boss. True. But as you build out and grow a team and so on, you're carrying and shouldering a lot of responsibility. As you bring on external capital, you have the responsibility towards all stakeholders. Your team, your shareholders, your clients, everyone in your ecosystem becomes somebody that you are managing effectively in one way or another. And so it is very important to be very grounded and to understand that, yes, it comes with a lot of responsibility, but from a VC perspective, it's also important for us to acknowledge that with founders, they need the right support system around them.
True.
They need the right enablers around them. And while we are privileged and our role is to be able to invest in who we believe to be the best fit for our purposes, we also need to make sure that we are there for them, that we're supporting them, that we're really taking on the mantle of riding that journey with them.
Yeah. I think this is an area that that concept that you discussed, the supportive aspect or the importance of the supportive aspect is, I think, something that is not talked about enough in a founder VC, relationship, because you get, and I think this comes from how funding is portrayed. It's a very big, everyone says like, oh, this company raised 10 million and it's all over the news and blah, blah, blah. But people don't understand what that means. Like, yes, that's a positive sign that you are moving in a direction. But behind the scenes, you now have, like you said, more people to respond to. Now, as a founder, I have a VC behind me that I have to answer to on my decisions, on how I'm moving things. So it's different than I think it's portrayed.
Look, it's different, but it's also part of the journey where you start
Sure.
to build layers. Some of those layers are basically you're bringing in, let's say, bring in an institutional investor. That institutional investor brings in with them views on governance, the introduction of, in the statutory documents of a company or constitutional documents of a company, you have the formation of a board of directors, what board reserve matters are, what shareholder reserve matters are, and so all of these things are considerations that, when you bring on external capital, you start to take on a very meaningful level of governance. And that governance is what provides the guardrails and the wireframes for you to be able to build thoughtfully while making sure that the right framework is there to enable that growth to be sustainable.
Yeah.
I referenced sustainable growth earlier.
Yeah.
Governance is not to be downplayed. It's very important. It's part of how you start to take your startup from an early stage startup. And as you scale, have that infrastructure in place that enables you to grow it into a larger company.
Yeah.
Whatever that definition is.
Yeah.
But a larger company, something that is more established, something that has the right pillars and the right verticals and the right infrastructure in place.
Man, that's such a great point, honestly, because I don't think people consider the governance aspect when raising capital. Again, like I said, it's all very focused on the number and how much you raise, but all the additional responsibilities, it's almost like you've almost entered a brand new business with brand new rules, brand new guidelines. Maybe the vision is aligned, but it's a whole different ballgame. So I know that, so I had the pleasure of speaking to Muhammad Mekki on the AUD podcast. So we were talking about the ecosystem and Astro Labs, and I watched his episode with Noor, of course, and they were talking about how much the ecosystem has matured from 300 million 6 years ago to now being 3 billion. So we talked about how the maturation of the ecosystem has happened from a business side with lots of unicorns coming up, and that's what's also fueling the growth of the industry. But I'm curious, the fact that we're going from 300 million now to 3 billion in 5 years, that's a 10x of funding also that's going in. So I've understood what's shifted from maybe a entrepreneurial aspect, because people are saying, oh, this is possible. We can build these amazing things and go global with it. But what has shifted from a venture capital mindset to be comfortable doing these larger investments?
It's several things. It's the ecosystem moving from nascency and starting to move through the journey. So you have, as you mentioned, there are some leading indicators that you look at, whether it's the emergence of more unicorns, the emergence of second and third time founders, the emergence of larger scale, more established businesses, an exit landscape. All that is starting to come into play. Even the advancement of capital markets, and the entire ecosystem has a role to play, from the early points of starting a company all the way through to having paths towards an outcome.
Sure.
And the reality is, what's happened is you've had more and more companies move into those growth stages. You've seen those quote unquote larger rounds. Those are linked to companies that are, delivering more, able to do more. The growth verticals or vectors rather, are much more vast. And so you're starting to see those aspects coming into play. And that's what's driven the 10x. There are also, more companies coming through. I would say that if you start at the earlier stages, you're seeing a larger number of companies kicking through. You're seeing more and more people taking the plunge, moving into entrepreneurship, looking at starting and launching their own businesses, following the path of, there's multiple paths you can take, by the way, when you start your own business. You can bootstrap it, you can build it yourself, you can build it into a sustainable self-owned business, or you can take on external capital. Taking on external capital has many forms as well. You can take on angel investors, you can take on institutional capital, and there's a variety in between. And it's just important to understand what the right source of capital is for you, depending on your strategy, vision, what you're building. But that's a whole other discussion. We can dive into that later if you'd like. But for now, I think just to bring it back, the growth, the leading indicators and the growth levers that we're seeing are starting to really show maturity.
Okay.
And so that's where we start to see more and more capital being allocated. So you're seeing more international capital coming into the region. So FDI is up. You're seeing a larger number of growth stage companies coming through. All of that is important to consider, and these are all important factors when you think through the growth of an ecosystem.
So do you see, all, like you said, all those are indicators, and I think I'm not going to dive into the fintech aspect just yet, but I know the government here has been very sensitive to the changes in that particular space, and that's why so much regulation on the financial side has come in, which is also fueling everything you just talked about and allowing these things to probably happen easier and at a faster rate. Like, you're adding a multiplier onto it by having like a good foundation and regulation and ecosystem.
So regulation is important, and the governance of the business that we referenced earlier plays a part in enabling, particularly in when you're operating in regulated industries, your ability to move forward. Having progressive-minded regulators is supportive and conducive to the growth of an early ecosystem. But again, the guardrails need to be there. At the end of the day, you mentioned fintech. Regulated financial services businesses need to be able to continue to have those very strict guardrails around protecting people's money. Anything that touches money flows, etc., does need to be regulated. Same with healthcare, same with education. None of us are going to go into an unlicensed or unregulated healthcare facility.
Yeah, true.
Right? So, true. I mean, you're not going to go and seek medical treatment by somebody that's not a certified medical professional.
True.
And so the reality is, those guardrails do need to be in place. It's important that you have somebody that's willing to listen, that's willing to be open-minded. I mean, remember, the first regulator globally in the digital asset space was the VARA in Dubai, the Virtual Assets Regulatory Authority. So that is the sign of a progressive ecosystem. Yeah. Somewhere that wants to attract and enable the best talent to build the best businesses to grow. And by the way, we're seeing a lot of incredible talent being building phenomenal businesses in the region that can serve us globally.
Yeah.
I mean, I'll talk about global ventures. 25% of our portfolio has more revenues from international markets than they do in the region now.
That's very interesting.
And so we're starting to see those numbers really kick in.
Yeah. It's interesting because when I was talking to Muhammad, we were talking about how historically the mindset, I think, in this part of the world was it's done better over there and let's bring it here. But now over the last couple of years with, a lot of unicorns that have started to come up from this part of the world, the mindset has shifted to now we can create things we can go global now from here.
Absolutely.
And
But
please.
But it is possible to generate unicorn outcomes from the region for the region.
Sure, of
right?
course.
It doesn't have to go global.
No, of course.
And it's not a predication. It's just software is borderless.
Yes.
It's global, and sometimes the innovation in some of the software and technology that's being built here is global best in class.
That's true.
And so that was the point that I was trying to make.
Yeah.
It's important to acknowledge and to differentiate. But at least from our perspective, we have 3 unicorns in our portfolio. The 3 unicorns were all built for the region and service the region.
Yeah. It's interesting that, so over the last 6 years, it's 10x. Do you think now with where the level we're at now, do you think or do you project it's going to be greater than 10x over these next, let's say, 5 to 6 years? Or do you think is that an unrealistic expectation?
I think the answer is it depends. It's not an unrealistic expectation. It just depends on the continued successful growth of those companies that are moving into the growth phase. And then how much capital are they going to need versus how much capital are they going to deploy versus how much capital is available to be allocated into these businesses.
So
there are a lot of factors.
I know.
And it's very difficult to predict 10 years out from today what the ecosystem is going to shape out to be. But the reality is there potential? Absolutely. Do we believe in, you mentioned earlier, am I an optimist? Sure. As a VC, by nature, you have to be optimistic. Right? You have to believe that these companies can grow to generate, supernormal outcomes.
Yeah.
But the reality is the region is presenting all the right indicators from a macro perspective, from a support and enablement perspective. You spoke about Mohammed Mickey. Yeah. The role and importance of ecosystem enablers is incredible.
Yeah.
Right? And what they've done with the Astro Labs and the like is fantastic.
Yeah.
And it is absolutely needed to help foster growth in an ecosystem, particularly as it goes from let's call it from its nascency to its adolescence.
Sure. Big shout out Muhammad if you're watching this. So we've talked about how I think it's very difficult to pinpoint, like I said, one specific thing to answer a question like that. There are so many different factors, not just in the ecosystem, but even when you're investing in a company, there's so many different things that you need to analyze. I wanted to come back to, let's say now I'm a founder, okay? I have a business. I am looking for funding. There are, from my perspective, again, I'm not the most experienced, so I don't know. I see 2 avenues. Either I look for a VC to invest in my business, or I seek out angel investors. Now, could you first of all, let's start here. Because there's a lot of founders in the community that I'm a part of that you don't even know where to start looking. I think I want to start with that question. Like, where do I even start to look for funding before we get into the differences between seeking out venture capital investment or an angel investor?
Just to be clear, it's not binary. And it's not just these 2 options that are
out there. Yeah. So I wouldn't know.
I think it's important to just say, start with first understanding exactly what it is that you want to build, what your business plan is, and what you're trying to solve for.
Okay.
Are you going out to raise institutional capital because you have a specific journey in mind where institutional investors are going to be the right partner of choice for you on your journey? Or are you going out to test a product and you want your early believers, whether angel investors, whether it's what people term friends and family rounds, or whether it's that super early, super high risk stage of a business where you're still iterating, trying to develop a product. You have a vision for what it might be, and you have the wireframes of what this very initial idea looks like. But then you need to start to take it to market. You need to start to test it. You need to start to see what customer receptiveness is towards this. whether it's B2B, B2C, and then what type of receptiveness you need. What is the feedback that you're getting? And then as you start to go through that journey, you start to understand these are the right levers that I focus on in my business plan, but these are the things that I need to shift, pivot, change, adapt. And then once you have that, you start to understand what type of capital you need from a quantum perspective, and then from a longevity perspective. Different types of investors have different levels of quote unquote patience.
Okay.
On how long they can wait for their capital. Maybe an angel investor can come and be your first check in, last check out. It's typically personal money. People can take personal decisions about what they want to do with it. When you move towards institutional, it starts to fit more within the frames of a mandate, within certain aspects, within certain, drivers. It comes with a lot of benefits, as I mentioned earlier, whether it's the governance, whether it's the support, whether it's the vantage point of having seen multiple journeys, whether it's the ability to open doors, the relationships to corporates, and.
Mm-hmm.
And so you need to know where you are in that stage of your journey to know what type of capital to approach. And by the way, even within institutional capital, there's different investors that will tell you we are better at different stages. You heard me when I introduced Global Ventures at the beginning of our chat today saying we predominantly invest around the Series A. We can provide whatever nomenclature you like, but the reality is, in our definition, what a Series A is it's a company that has traction, that has achieved product market fit, and wants to go from startup to scale up. That's where what we do, we believe, is most helpful.
In that
so
phase.
Where we can create an impact is when you want to go from startup to scale up.
Yeah.
But that 0 to 1 aspect, there are more specialized and better suited investors to come in at that pre-seed stage to help you with the very, very early stages. Don't get me wrong. I love seeing businesses come to life from an early stage. And so maybe as Saeed, I will be, working with a few founders, just trying to spend time with them, understanding what they're trying to build, trying to share my views, my thoughts, what I've seen from my experience. But from a Global Ventures perspective, we're not your pre-seed investor, we're your Series A.
Yeah.
Sometimes we'll go a little bit earlier, sometimes we'll go a little bit later, and that's okay. But the reality is, it's important to acknowledge where you can be the most value additive.
Yeah.
And where you are the right partner. And so while we believe that we have a certain skill set, capabilities, and aspects that we build specifically for around that phase to enable that type of catalytic growth, there are others that have focused on the very early stage as well. And they are the right investors to come in at that early stage to help open up the doors. And they're perhaps the ones who can sit with you at a very early stage and say, if you go this direction, then these are the right types of follow-on capital that we'll seek for you. If you're going that way, that's the right type of follow-on capital that we're going to seek for you. And they have the relationships to start to help you uncover that. And back to the earlier comment on it's a lonely journey for founders, particularly at an early stage. That comment actually just resonates, because what you were saying now is, you don't know where to start. It's okay. It's okay, right? Start with going out, speaking to other founders, understanding what their journey was like, who they spoke to, did they have the right type of support or external capital, did they need it? If they needed it, then how did they go about it? Who did they approach? Friends and family, and then there are dedicated angel investment platforms, there are dedicated pre-seed and seed investors, institutional and none. Sometimes you go the strategic route. You find somebody that's very complementary that can accelerate your growth and make it much more efficient for you. Do you bring them on board early in the journey? So there's so much optionality and variability around it. And it's down to your business plan, your thoughts, your targets, and your ambitions.
Yeah. That was awesome, by the way. Thank you. That explanation was fantastic, because I think you touched on so many of the points that I think a lot of founders think about or struggle with. Like, for example, when you said, what stage of the business am I at? Do I just need, some capital just to, put some fuel on the fire? Or do I need someone now to help scale me up, to that next level? All these things. And I think a lot of times founders have this misconception that I need to have funding, for my business. But what I've learned in my conversations with entrepreneurs is that there are two very different approaches. You can go venture backed, you can go bootstrapped. And again, comes back to what you were talking about, like what's the product? What am I trying to solve? What does this need? Can I do this bootstrapped? Or does it need capital to really, give it legs? And you also talked about how, what I really appreciated was how you guys focus on Series A in particular, because I think this is also something founders need to consider is who do I need for this specific stage? Now, looking at it from a VC aspect, you said you guys focus on Series A because that's where you feel you have, the most competitive advantage and where you guys can add the most value. The question I start to think about is, I'm like, okay, so I came to Saeed for my Series A. We did the Series A. Then, as a VC, because I don't understand how VCs compete. This is something this is something I haven't thought about. So I'm like, do you have to? Is my the niche or my target where I compete? We are the Series A guys, or these are the Series B guys, or these are the pre-seed guys. How do where does the competition for VCs come in? Because I don't think I've ever figured that out myself.
So the best companies tend to find, let's say, oversubscription of capital towards their needs.
Okay.
So let's say a company is going out and raising $5 million, and the founders and or earlier investors have agreed that they do not want to dilute more than X% through this journey, and they have the numbers to stack up and justify that type of implied valuation. Then there's a specific number that they're going to be able to raise, and VCs want to allocate specific amounts of capital. And so the competitiveness can come from, if that is oversubscribed, then who do you bring in? Who is the right strategic investor? Who is going to come in and be the most supportive on your journey? And so the competitive levers are, how supportive can you be? Why are you differentiated? Why are you supportive? Why are you the best suited investor to join the journey and to be on that cap table? And one of the things that I think has helped us as Global Ventures in our personal journey is we've always been thesis driven, which means that we will do our research. By the way, we publish our research on our website. We'll do deep dives into sectors. We've done everything from fintech to digital health, supply chain tech, agri-tech, ed tech, you name it, right? Mobility, prop tech. We've published in-depth research reports on all of these sectors. And what you will notice is that we try to unpack what the value chain looks like, what the verticals within that value chain look like, and then who are the key players within that space. And then try and identify those investment opportunities and go and allocate capital towards it. The flip side is you'll find that founders see that you understand and have built time to build an in-depth knowledge of a specific industry or sector. And so they want to have the conversation with you because you understand the nuances around it. And perhaps you've built relationships within that space. Those are also differentiators. And then finally, as institutional VCs, there's third-party capital that comes in as well. What's termed LPs, limited partners, that come in and invest in funds. Those LPs are also incredibly supportive through the journeys. They're able to come in and provide specific specialized support. Sometimes you'll have LPs that are experts in certain sectors, and they have a vested interest to help the underlying companies in the portfolio to grow and succeed. And so all of a sudden you have access to this network of incredible experts. And it's on the VC to facilitate that type of interaction and to make sure that that curated conversation is guided and is enabled.
It's very interesting how, because I think as a founder myself and speaking to other founders, we think this is a very enlightening conversation for me because I'm getting to see how it works on the other side. How do you think? Because as a founder, when you want to go raise capital, you kind of, I think from a mindset perspective, you're like, I'm coming because I have to prove something to these guys so that they invest in me. But it's interesting that on the VC side too, because like you said, my company is valued at 10 million, let's say, and there's like 10, 20 VCs around that are comfortable to invest 10 million. Then that's where the VCs almost have to sell you in a way, like this is what we can do to help, to help you.
This goes back to the earlier part of the conversation, which is you as a founder need to be very specific and targeted with who you want to join your journey.
Yeah.
Be picky. If you fundamentally believe that you're building the best product to solve for the largest problem and have the most scalable solution, then you have that fundamental belief. You want people who believe in that journey and who are going to be on that journey with you as enablers. You want people who are going to help accelerate that journey for you, make it more efficient, more effective. And it is very possible to identify those investors. And you can be picky. Sometimes you'll walk into a meeting with a VC and walk out and say, it was a fantastic interaction. Other times you'll walk out and be like, I just did not get along with that person. I do not believe that this could be a long-term journey where we are, moving together towards a common goal. You see that there may be, and this goes back to, again, the earlier part of our discussion where we were talking about the journey starts before investment.
Exactly, yeah.
But it goes both ways.
Yeah.
It's for the founder to also understand, is this the right investor for me? Is this the right, person or people or team who I want to have involved in what I'm building in my baby?
Yeah. No, that's such great advice, because I think, again, we typically think of it as very one way, us to them, not the other way around. And like you said, it's, if you have this strong belief in your product or what you're building, it's like a marriage, like we are in this for all the good and all the bad. So you really, like you said, you should be incredibly picky on who you decide to bring on that journey. Coming back to just the founders for a sec before we dive deeper into the VC aspect. So one thing that was interesting in my conversation, the reason I keep mentioning Muhammad, because we just released the episode, so it's very fresh in my mind. He talked about, how everyone talks about the product market fit of, you have to get your product to a certain level, and then that's when you maybe can start looking for investment. But he's like, the thing that people don't talk about enough is the founder fit. And because I could be a founder, I have a great product, and let's say I've gotten it to this stage now, a Series A. That doesn't necessarily mean I'm the right founder to continue that journey to continue building and taking this company, to those next levels. So I'm trying to put myself in your shoes as a VC. You're like, okay, there's this guy, there's a founder, and this is the product. We think the product's fucking amazing. The founder, we're like, he's not amazing, he's good, but we do have, some question marks. So that's when I start to think about, I'm like, I know, I'm sure it's a balancing act and everything's contextual and nuanced, but that's where do you, in your experience that you've seen, where does the weight typically fall heavier, would you say?
So we spoke about everything from a company perspective. We didn't spend time talking about, for a second, the founder perspective. It's probably one of the most important elements to consider when you're making an investment.
Okay.
Right? So when you think through, is this the right person or team to deliver on what they're trying to achieve? We spoke about business plans. We spoke about, scaling properly. We spoke about identifying the right problems. But are you fundamentally the right person or team that are trying to solve for this? Are you well equipped? Do you have the right resources around you? And if you are, and you have the right resources around you, or you have access to bring on the right resources around you, then great. But there's always this thing of why you, and why would you be able to do this in this sector, in this industry?
Exactly, yeah.
Back to the comment on, you're not going to go to receive medical treatment from somebody who's not a doctor or not a medical professional. It's the same analogy to a certain extent. You need to be qualified to be able to build in a certain industry or to provide the right type of insight into growing a business. You can't just say, I want to be an entrepreneur, I'm going to found a business, and I pick sector X. No, it doesn't work that way. You need to be thoughtful. You need to have the experience. You need to have the relevance to a certain extent into why you're doing this and how you see it. And a lot of the times, some of the best outcomes that we've seen have been linked to where founders have experienced or identified a certain problem at a very early stage through some of their earlier career or earlier experiences. And they've said, this is such a sizable problem and no one's doing anything about it. I'm going to do something about it. And I'm going to solve it. And this is how I want to solve it. And this is why I believe that the way I'm going to solve it is going to be very scalable.
Yeah.
I said I. It could be we.
Yeah, of course. Yeah.
Founder or founding team or broader team in general.
Yeah.
But the team aspect and the founder aspect or the founding team aspect, they're all very, very critical assessment pieces that go into the formative part. When I was saying, get to know each other, assess each other. And the flip side is true. So when the founders are assessing the VCs, it's not just the name of the VC on the board. It's actually who are the people behind it, who are the people who are going to be working with you. Because that's what you want to ultimately bring in. And by the way, one of the things that's very important is the due diligence process is a two-way process as well. It's also for the founders to DD the VC to a certain extent to understand, are they the right fit? Go out, do your reference checks. Learn about what they've done with other companies, with other founders. Go speak to founders in their portfolio. The portfolios are typically public. Go identify those founders. Ask them. Ask to be connected to people around their ecosystem and say, will you please share with me your experience with X or Y, what they've done, how, why. It's important. It's important that you are diligent and that you do your homework before you bring somebody else onto your journey and invite them into your cap table.
Yeah. Again, this is what I'm learning a lot through my conversation, Saeed, is in this entrepreneur world, in this VC world, the biggest mistake I see, and I've made myself too, so I'm not saying like, I know, but is you just start before you do any of this process. So like I have kind of like what you said, like, I want to start a business. Okay, I will do this and in time I'll figure it out. But you're going to get to a point, whether it's in your journey as a founder or as an entrepreneur, when you're going out to seek investment, you're going to hit a point that you're going to have to sit back and be like, okay, I really need to research. I really need to understand what's going on. And I think this is a thing that so many people lack to do first before they even begin, down this path. And you talked about due diligence. You talked about the team. I'm curious for VCs because I've heard this. This is something I've heard, but I don't know if it's true. What I've heard is VCs will always look for a team rather than a single founder. Is that true from your experience? Or does it not matter?
It's not that it doesn't matter. It's a case-by-case basis. The reason why the generalization is that you would look for a team rather than an individual is you need that support system around a founding team. You need that aggregation of different skill sets. It's not often that you will find one person that embodies everything that you need to enable that success in a business. To be, super capable and knowledgeable in tech, coding, building, to be super knowledgeable in commercialization, in marketing, and everything else that you need around the business. It's not common that you find it in one person. When you have a team, typically you'll find more specialization across multiple people. Typically, again, sometimes you find that one person that has everything. But the flip side is, again, going back to that notion of a lonely journey, if you're sharing that journey with one or more people, it becomes easier for you to go through it because you have that support system that's going through the exact same journey that you are.
Okay.
And so you can go through your peaks and troughs, but you have other people there with you to support you throughout. And so that's one of the factors that kicks in and that makes it important. But, it's important to recognize we've invested in solo founders before. And they're absolutely incredible. They're doing amazing things, and they surround themselves with phenomenal teams. And so it absolutely depends. But I'm telling you why the generalization.
Okay, that makes a lot of sense. I think I discounted the support aspect of having people around you that are going through this with you because it will be easier, and also the specialties aspect because. For any business, you need all the things you talked about: marketing, distribution, operations, all that. And it's rare to find someone that has, let's say, a 10 out of 10 across the board in all of those. That's why you have people around you that will help you in the areas maybe you're not the strongest at. Shifting over now I wanted to talk about kind of the pitching and how you guys analyze things, So I'm trying to bring myself as a founder into this, so how I would present myself and how you guys would be analyzing the situation. So one of the biggest misconceptions I've heard about with pitch decks is founders are typically feature focused rather than they try to sell. They're very heavy on this is what we can do and these are the features and this is why this is great, rather than creating a strong funding narrative. So if I came to you and I'm like, all right, Saeed, I want to create the dream pitch deck, the best pitch deck, because you guys, I'm sure you come across thousands like all the time. Could you just tell me what are the key components you're looking for like a strong, solid pitch, just a pitch deck as a template?
The, no one size fits all. Right?
Fair.
What you want to do is you want to combine a pitch deck with storytelling.
Okay.
The storytelling aspect is where you're able to articulate what it is you're trying to do, why you're trying to do it, why it's very important that it is done, and then how, going through this journey will enable some form of outcome. The reality is what you need to cover off during your pitch is going to be things like, this is the lay of the land, this is the market, this is the size of the market, this is why it is a very scalable aspect, the problem, the solution, why your solution is unique. Here are the numbers behind it. These are the people who are doing it. These are the features, products, verticals that we're trying to tackle, and this is how we're going to superimpose all this together to generate some form of an outcome. And in it, towards the end, you'll say, and therefore, based on this business plan, this is how much we're raising, this is what we're going to be using it for, and so on. But the reality is, you need to cut across all of that. So when we talk market, you want to be able to show a very sizable TAM, total addressable market. What of that TAM is actually applicable to you? How you plan on capturing it? What is your go-to-market? Or if you've gone to market, how have you captured part of that market? What is your strategy to continue to grow and accelerate and scale? Why is this such a pronounced problem? How are you solving it? And why is your solution unique? And what differentiates you from competition? So when we talk about your uniqueness, typically what you tend to see is either a 2x2 matrix or some form of a table or a landscape saying, this is how we stack up against others who are trying to crack this. It's very, very rare that you find somebody that's coming and saying, we're the only one on earth who are doing this. Very, very, very rare.
Yeah, very true.
Right? Because at least someone's trying to crack something of some aspect, typically somewhere out there. And then it's about bringing all that together. And that's where the storytelling aspect comes in. You want to take all of these aspects and you want to lay it out in a certain flow, but you want to be able to articulate it. It needs to be natural. It needs to be flowing. Don't make it over-rehearsed. It has to be a conversation. It has to come across as you get it, you understand it, you're going through it. It's not like a quote-unquote proverbial homework that you're doing. It's I know this. And so I am sharing with you why I'm doing this, what I am doing to empower this, and how I want to generate an outcome. And I keep saying generate an outcome. I'm not talking in specificity. I'm not saying go public or sell to a business, or I'm saying generate an outcome, whatever that may be. And then there needs to be alignment around what that is for everybody. That's it.
So if you, just to challenge it for a second. So you've talked about the importance of creating like a story, and because this is the question I start thinking about, is you talk about all the different sections or data points or case, like I have to build my case, the data, the structure, all this kind of stuff. So I start to think, I'm like, okay, what if I have the structure in place? I've got the case study I have built showcases there is a potential great outcome to achieve, but I didn't tell my story in the best way. I didn't convey a great story. How would you guys look, like how important is the story to like the pitching aspect? Because I might just not be a good presenter, but you guys as the people looking at what I've presented though, you're like, oh, we see something like big here. And then the flip side could be like, oh, maybe that foundation or the case study isn't very strong, but it's a great story.
You shouldn't be penalized if you're unable to present it in a certain way.
You should be?
You should not be.
Oh, should not be. Okay.
But that means that you need to figure out how you're going to be able to capture attention and how you're going to get people to listen to you, even if you need a different way in which you need to articulate your story, your journey, etc. By the way, part of when you're pitching also shows your ability to commercialize. So there's a lot of, let's say, linkage towards the commercialization, sales, distribution aspects.
Yeah, I didn't think of that.
And so it's sort of some of the interactions that we will have together as founder and VC will also be telling of what interactions can be like in market. And I understand that sometimes, it's stressful when you're coming in and you're wanting to present that business and you're seeking a certain outcome. Sometimes, some people come in and they're a little bit nervous, and it's okay. And it's on us to help the person not feel nervous and to help them feel comfortable when they're having that conversation with us. Then to try to really understand what it is that they're trying to do and how they're trying to do it and how they're trying to build it, which is why I mentioned the storytelling aspect.
Yeah.
I can't emphasize how important like that intro part is on the company and on the relevance of pulling all this together. You want to be very sharp, succinct, pointed, and show that you have mastery over your business. That is important.
Of course.
Right? Because at the end of the day, that's what breeds confidence and the ability for you to really take this to the moon.
Yeah, what's very interesting to me listening to how what the story was showcasing from your perspective of, how can this person commercialize? Can they grab the attention? Do they deliver it in a very confident way to show mastery over their business? These are things I would not have considered, because from my perspective, I was like, okay, maybe if I'm not the best presenter, but this is really good, it will carry it. But listening to you, it's very enlightening to hear there's so many, besides the deck itself, there's so many different aspects on the personal aspect or the storytelling aspect that are,
the deck
to
is
consider.
one part. It's the entire interaction.
Yeah, and I think that's what people...
Some of the best pitches I've had, by the way, people come in and they're like, listen, I'm going to show you the deck. I'll send it to you after. Let me tell you our story.
Really?
And then we sit there and it's a conversation.
Okay, very interesting.
So maybe the first interaction is a 1-hour conversation. Maybe they send the deck after, or maybe we sit down for 30 minutes afterwards, go through the deck. But it's just important to first understand the business, understand each other. So you will find that sometimes you're just sitting there and it turns into just a conversation. And in that conversation, the person is so good at storytelling, articulating what they're trying to do, and they take you through that journey where even slides aren't necessarily needed to provide that support. In a lot of cases, by the way, don't get me wrong, it's very helpful. And always have your pitch deck ready. But my point is, there is a world where it's that conversation, that chemistry, that interaction that is very important.
Yeah.
And then you can provide whatever
underneath
supplementary material is required to support that conversation.
Sure.
But the reality is you need engagement and you need that two-way flow.
Gotcha. That's so helpful, by the way. That's a very, very insightful take, because I think what I hear, in the community is most of the conversation surrounds the deck, like how do we create the best deck, whatever. So this is very interesting
Make
to
sure
hear.
you have the best deck.
No, for sure, yeah.
We're not today shouldn't be
not discounting that, guys. But also, there's a whole other element that you need to be
the interaction and the
on.
conversation that surrounds it is super, super important.
Yeah. So we've talked about as a founder and my pitch deck and the importance of storytelling. Now, I want to understand how you guys look at it as a VC, because from my perspective, I'm like, okay, for a VC, you guys get probably God knows how many applications a year. And you guys have a pool of money that you will allocate. So some will go here, some will go there. I know you guys are big into, tech, agri-tech, digital health, fintech, of course. So the question I start to think about is, okay, because now everyone's competing for a finite pool of money, right? And there's advancement in tech in all these different industries that we've talked about. So how do you guys analyze what to invest in? Because let's say, because you might have a plan at the beginning of the year, I can imagine all right, we see agri-tech is going to grow by 50%. So we're going to allocate 50% to funding that. And then the rest will be split up into other areas. But then maybe a founder comes along that has a great business in this that might divert what the initial plan was. Do you make that shift? So I'm trying to understand from a VC how you guys analyze, and also you guys are funding. You guys are supporting Series A's. So there's a significant time frame. Like this, it's a long-term time frame to get the return that you guys are kind of looking for. So how do you manage like that payback period, or how do you look at this stuff?
So it's on us to assess all these factors.
Yeah.
Part of it is, I referenced it earlier today when I said portfolio construction. So it's about thinking through how we would like to shape out a certain portfolio in an ideal world. What would it look like? What types of companies? What balance? In an ideal world, they all generate super outcomes. The reality is that it's not always going to be the case. There are some that will generate mega outcomes, and some that will have different journeys. And the reality is you need to find those where you have the highest conviction, where you have the highest belief that you can maximize the chances of an outcome. And so, to your point, part of it is sectoral, part of it is geographic, part of it is managing risk and having a diversification strategy around it. And then the other aspects are solving for what fits within your mandate as well.
Okay.
And so it's sort of superimposing all these things on each other. And yes, we're fortunate to see high volume of companies coming through. We invest in, I'd say, less than 1% of the businesses that we see at first pass.
So out of, let's say, just sorry to interrupt, just say last year, how many applications would you have seen, you guys?
I mean, a very sizable number.
Like thousands?
Yeah.
Wow.
So a very, very sizable number. But
wow.
I would say we invest in less than 1%. And the reason is it's all those externalities. So it's combining those factors of what fits within the mandate, what fits within the sector of interest, what fits within the geography of interest, all of those aspects coming in together. What's at the right stage? Where can we be the most value additive? Where can we generate the best, or where do we believe we can generate the best outcome for these businesses? And so that's the combination that we're going to be looking for. And so it's not always a binary discussion. Is this a great company? Yes, okay, I invest. Is this a great company that fits my mandate, that is in line with what I'm trying to do and deliver, that is fit in what I've promised my stakeholders that I will be delivering on? Does it all come together? And for every VC, you'll find that there's differentiated aspects around that. And so it's not not one size fits all.
Yeah. What I've taken away from our conversation so far today, Saeed, is it's very contextual. It's very nuanced. All the rules and guidelines and processes and mandates that we have just discussed, there's also, every situation is quite unique and has to be measured against that to see if there's, maybe we need to be more flexible here. Maybe this is worth, taking a bit of a risk on. So let's say, okay, we've decided to go ahead. The due diligence aspect. What kind of time frame? So let's say we've had now our pitch. We've had our first interaction. I've given you a great story. From that meeting to the time we actually close and we decide, we will be working together. What kind of time frame is that? And what, from a due diligence aspect, what are you guys looking for? That's something I've never really understood personally myself.
Sure. Happy to share. The answer is it depends on the readiness of the company and the information and data that they have. And so typically what we'll do is, once we're ready to proceed, we have a due diligence checklist and a questionnaire that we'll share. If you're able to answer all those questions and provide the right supplementary materials, then we can go through that very quickly. A typical investment process can go, if all data is available, call it somewhere around 6 to 8 weeks.
Wow! Oh wow! It could be that. It could be that quick. Okay.
If everything is available.
Yeah.
And it can go longer. It can go months. Again, it depends. And it depends on the legal aspect as well. So, do you have documentation in place, or are you getting lawyers to draft everything from scratch? How complex or not is the negotiation process? How many stakeholders are you solving for? How many different inputs do you have? If you're raising a single round of funding from a single investor and it's a one-to-one conversation, it's very different to a one-to-many conversation where you're going to have to solve for multiple inputs and multiple data points and so on. And so typically what happens is, in that kind of scenario, you'll have one or a couple of investors who position as lead, and they sort of set the terms. and then others that choose to follow on those terms, and they come in as part of an aggregated round. That's in the interest of trying to accelerate things and to solve for it. And typically a lead investor will solve for minority shareholder protection in general, which means that others are also covered by whatever is negotiated in a broader sense. And from a DD perspective, you're looking at things like commercial, financial, legal, technical, and then you can be verticalized. If you're within certain industries there, you're going to have to go through specifics. So risk and compliance or elements around governance, regulatory, and. So there's nuances to it. But the general consensus is if everything is ready, everything is placed, it's an efficient sort of legal discussion and negotiation. A transaction can be completed fairly quickly.
Okay.
But it's important that it takes the time that it does to be able to generate the right framework and structure around what a round of funding would look like.
Sure. Yeah, because due diligence is an area this is very helpful to me, so thank you, because I didn't know what are the things you guys are looking at. I didn't know if you have everything in place, it could happen that quickly. In my mind, I don't know why investment or VC investment has always been like, this is going to take some time, a year, 6 months, whatever. That's just what I'm not saying it couldn't.
Because in some cases it does.
Yeah,
and the reason why it does is because sometimes it's a conversation. It's about, no, I'm not quite ready with this type of information. I've started to think through aspects 1, 2, and 3. I'm talking to this investor and that investor, and I'm building relationships with these people and those platforms. And so the whole thing is a longer journey.
Yeah.
But the transaction part of it, which is where you go in, you have that first discussion, you run through a process, and you close, that is finite, and that can be done in a certain period of time. And again, it's down to the readiness.
Yeah.
Always have a solid, so we spoke about pitch deck.
Mm-hmm.
You need to have a solid business plan, a model, a data room. The data room should have all the aspects that I referenced earlier on aspects of due diligence. You want to have everything available. The more structured and the easier it is for an investor to run through that information, analyze it, and generate an opinion, or an informed opinion in that case, on what's being presented, the quicker you can run through a process.
Sure. So we've talked about the readiness. We've talked about so many different things today. I just want to be conscious of our time. I want to round off the conversation and have just 2-3 questions for you. So the last thing I wanted to touch on from what we've discussed today side is this. So I'm going to use Shark Tank as an example. Okay, I love Shark Tank. I find it just very interesting. I have learned a lot about, you should go in with this. But obviously, again, even that show proves everything is contextual and nuanced. Now, when it comes to valuations, because you see stuff on like Shark Tank, and even me, because after years of watching, I'm like, what you're asking for is absolutely ridiculous. How did you think you were going to get an investment for this? So in your experience now, because the company, they found I'll come in with, this is what I think my company's worth, and this is what I'm looking for that percentage. You guys will do your analysis and come up with your own number. From your experience, how far off is it typically? He starts that. Do you know what I'm saying?
That's a very broad question. It depends. I guess the investor always wants the lowest valuation, and the founder wants the high. But the reality is, it needs to be fair.
Okay.
It needs to be what's fair and what's representative of the business at the stage of where it's at and where it can go.
Okay.
So for an investor, they're going to underwrite a certain risk profile, and the valuation is an implied outcome of that. There are many methods, let's say, for you to value a business, and typically the valuation that let's say an investor like us would arrive at will be from an amalgamation of different efforts or methods, and we will combine those to come up with a number that we believe is fair. Now, what you need to be considerate of is what business plan are you building, how much capital are you raising, and what is the implied dilution at that fair valuation. And so that is a fluid discussion. Yeah. So it's not that you say, I'm going to go to market and raise $10 million and I have $5 of revenue. No, let's take a step back. What are the fundamentals? What are you trying to build for? Why do you need $10 million? If you're not at a stage where your traction of your business justifies a certain valuation, build it step by step. Go through the building blocks. Don't try to shortcut your way through. Go through the journey. Every step in that journey is formative and important and will help you build the right infrastructure for your business as you put them, as you put the bricks and lay the bricks there, one by one.
Yeah.
They'll come together into something that is fantastic. But it's also important to be thoughtful.
Yeah.
In the way that you do this.
Yeah. And I think that's really great advice of going through it in blocks and like different stages of this is where we are now, this is what it's going to look like, what I think I need for the next phase. Because I think, from what I've seen, I don't know enough information. Sometimes I think we, as you said, as investors want, the maximum for the maximum they can get with the highest percentage probably. And founders going to want, the maximum capital for the lowest percentage as well. So it also, like you said, listening to our whole conversation today, it needs to be fair because at the end of the day, you need to be happy and I need to be happy because we are, as we've said, partners. We are here to work together to make this happen.
Partnership on an aligned journey.
Exactly.
Right? That's the most important thing. The genesis of the entire conversation is that is what you're trying to solve for. That's what you're trying to build for. And so you want to bring that together.
Exactly. Saeed, I just have 2 more questions for you. These are questions I ask all my guests. So looking back either personally or professionally, when I ask you the question, what are you most proud of for yourself? What would you say?
Good question. As cliche as this may sound, I'd say my family.
Many people say that. Many people say that.
So for me, that is my source of, pride, my drive, my joy, my everything.
Yeah. And yeah, many people have sat in that.
Shout out my wife and daughters.
Shout out to the family. And of course, I don't think everyone can, understands that right off the bat. And for my last question, Saeed, what is the message you'd like everyone to take home with them today?
I think the founder journey is one that you need to be very thoughtful about. I used that word earlier, intentionally. It's one that you need to have high conviction behind. You need to believe in what you're building, but also be picky. You said it earlier. Be picky about who you invite on your journey. This is a precious, precious thing. So make sure that you have the right people who will help maximize your chances of success, whatever your definition of success is. Yeah. Just make sure it's the right people that you're surrounded with and the right support system that you have around you.
Yeah. Man, I couldn't end it any better than that. I wanted to say, Saeed, thank you so much for coming on the show, man. I've wanted to speak to you. First of all, venture capital is an area I haven't spoken about on the show before. So I'm always looking for new topics and areas that I haven't discussed. And of course, once I thought of that, I was going to no one else but you, of course. Thank you for enlightening not just myself, but the audience on so many different things today of the founder journey, of how venture capital works, how to look at things, pitch decks. We've covered, was a masterclass in you want funding, this is how you have to do it. This is what you need to think about.
I really appreciate you having me here. Thank you. And thank you for the very, very kind words. Means a lot. And anything I can do to be helpful to you and to anyone else is always, I'm always here.
Habibi, thank you so much, man. Guys, to everyone listening, please make sure to like, follow, share, and subscribe to the podcast at Hope It Helps Pod on all channels. And as always, guys, hope it helps. Peace. Yep. And that's another episode in the bag, guys. Thank you so much for tuning in. I really, really appreciate it. The goal of this podcast is to provide, as I like to call it, education on demand. We cover a wide range of topics, and the goal is to provide you with the knowledge, the tools, and the insights to improve your lives both personally and professionally. And if you're enjoying the show and you're enjoying the content, if you could please do me the small favor of hitting that subscribe button, would really help me build the show and build the channel, and that's all I ask. Stay tuned for more inspiring conversations, bigger guests, and as always, guys, hope it helps.